So in this video, I'm going to roll my 182.50 covered call on Nvidia. So you can see at the bottom here, we've got one covered call option open where the average price that I sold it for was for $52 and the market value is basically $1. So we've pretty much realized the majority of this option. So this option will expire worthless and the market does close in 8 minutes. And Nvidia is up today and there's a bit more call volume in there. So I think I want to keep this trade going by rolling my option into the next week's cycle above 182.50. And Nvidia will probably need to make all-time highs for it to get to my covered call strike. So what we're going to do, we're going to roll this position by clicking on roll. And you can see here it's moved the expiration out by 7 days, August the 29th. And I'm liking the 190 cover call here. So again, if I select sell, now what you can see if I drag this up is that we are buying back the 182.50 August 27th call for $1 effectively. And we are then selling to open a brand new call at the 190 strike 7 days out, August the 29th, for at the moment a mid price of $189. So effectively what we're doing is we're closing the option, the 182.50 expiring in 6 minutes, and we are selling to open a brand new position simultaneously at the 190 strike. So again, we are taking into account that Nvidia is up 1.81% for the day. A lot of the stocks are up. Powell's hinting at rate cuts, all these good things, which are only good for the stock market. So again, there's a lot more call buying and therefore making the options for selling options a lot more expensive. So this is why I love the covered call strategy. I already own 100 shares of Nvidia. If for whatever reason I get called away at 190, that's fine. My cost basis is at 115, 120, something along those lines. So I'll make a good amount of profit. The goal on this trade is not to lose my Nvidia shares. So if Nvidia, which is currently trading at 177.90, does get to $190 within the next 7 days, I will be rolling this position and therefore managing the position and therefore trying to make sure my shares don't get taken away. So again, what we got here, we got a mid price of 189. So let me go get this option filled and let's see where we end up. So we got filled pretty quickly. So I probably could have asked for more, but you can see here that we bought back the August 22nd 182.50 call for $1. And then we sold to open the August 29 190 call for about 190, I think it was. And therefore you net the two numbers out. Therefore we picked up a net credit of $1.89 per share. And because each option contract is 100 shares, we made $189. Now, again, I've been shooting this video for about a couple of minutes now. This is the power of options, the power of making passive income. Well, I had to do a little bit of work to get that passive income, but again, it's not too taxing to be able to do that. So this is the power of what we learn here. So again, the best strategy that I use is what's called the 1-1-1 trading strategy. You can get that with the top link down below if you want to learn about that and get all the exclusive bonuses absolutely for free. And I shall see you guys in the next video.